What is going on, investors? Hopefully, guys are doing well out there. We've got multiple FAANG stocks that have moved into a buying zone. Now, if you want to jump to those, there's always timestamps. We'll talk about that when we get to the technical segment. I'll also chop these out and put them into short form videos as well, as we have multiple of the Magnificent 7 stocks that are in buying zones. I have personally bought these ones myself. I think you've got some great opportunities there. We obviously had earnings this week from Nvidia. We've got a ton of news on the AI front. We've got CEOs clapping back at each other on X, on conference calls. We've got so much to talk about. Better kick things off like we always do with Meta Platforms. Started the week at 681. I am recording this like 20 minutes before the close. Otherwise, it would have been out later tonight. Currently, Meta Platforms close to about $660. I've got a big announcement, Equity Empire. The paid subscription is likely coming next week. I keep saying likely because, you're relying on these website dudes. And so, look, it looks like things are on track. We are populating the website with content. It should be on track for an early launch next week. I tell you what, I've got a great offer for all of you. And I tell you what, I think it's going to be really, really good. I think this is going to be one of the best services from an analysis standpoint. You are basically getting my analysis at a fraction of the cost if you were to hire me on your own. And so it's going to be a great value. On top of that, if you're a subscriber to the Substack is going to live on. I'm going to send out bi-weekly emails, ones at the beginning of the week and ones at the end of the week. Make sure you're subscribed to that down in the description below. And we'll talk more about this at a later time. Let's move on to Meta's news. They're reportedly in talks to get a $35 billion loan essentially from Apollo. This is to build data centers. So it's interesting. Meta's not pulling into their own pockets. They've obviously, like most of these companies, have a large cash balance sheet. They're going to tap Apollo for some financing, and that is to help the company build out, as they said, $60 to $65 billion worth of data center spending this year. Now, what we often talk about with Meta is that they're a little bit different than Microsoft and Google and Amazon. Microsoft, Google, and Amazon are spending numbers that are a little bit bigger than 60 to 65 billion, but those companies actually have to lease out, or they don't have to, but they do lease out their excess capacity. So some of the purchases that those companies make and the investments that they make actually comes back in the way of leasing out that server space. Meta is a little bit different. They don't have that a part of their business model, at least at the current time. And so it's showing you that this company has massive demands for this. Anytime you spend, I'm not on Facebook really anymore, but I'm spending a decent amount of time on Instagram. There's a fair amount of AI going on there. And if you also buy the ads, there's some AI stuff happening there. Now, the company, at least from a rumor perspective, plans to spend about $200 billion on AI data center project. Now, Meta responded to this, and that they said they've been clear about their data center plans and disclosed their planned capital expenditures. That's right, 60 to 65 billion. They say anything beyond that is pure speculation. What I would say about this is this headline is actually probably accurate. They're not going to spend $200 billion this year, but this company is speculating about the future. They are speculating on how much they're going to spend next year, over the next 3, 4, 5 years as it relates to data centers. And my guess is the number is close to $200 billion, particularly if you look out 2, maybe even 3 years. So the company probably does have plans to spend $200 billion. They're just not going to do it all in 1 year. Now, Meta is planning to release its own standalone AI app. These have obviously gained a lot in popularity over just the past 30 days or so. You had DeepSeek come out with theirs. It rocketed to the top of the charts, at least in terms of popularity. And then Grok came out with their own standalone app. They already had one, and then they released Grok 3. That rocketed to the top. And I find myself actually using the darn things. I don't use DeepSeek, but I use Grok quite a bit. And I'm actually finding that I'm going to that more, and in a lot of cases in lieu of going to Google. And so Meta is thinking about coming out with their own standalone app. That caused Sam Altman saying, okay, fine, maybe we'll do a social app. He says, laugh out loud, if Facebook tries to come at us, we just do an Uno reverse them. It would be so funny. No, Sam, I actually don't think that would be funny. I don't think you can launch your own social app. I don't think you have what it takes to compete with Meta on the social standpoint. So maybe you should just focus on what you're doing instead of worrying about what Meta is doing, because Meta has the capabilities and they certainly have done a very nice job rolling out their own open source language models, which OpenAI, if they had remained to the core mission of the company and actually had open source models and actually created an OpenAI, companies like Meta actually wouldn't be infringing on your turf. It's because, Sam, the decisions that you made are actually bringing this competition onto you. And I would say anybody that has tried to compete with Meta, at least on the social aspect of things, have come up short most of the time. Now, Meta apologized, though, for a glitch on their social media, Instagram, where you had reels showing graphic content of people, like bad stuff happening to people. Now, I was not able to witness any of this content on my Instagram feed, but clearly anything that you post on Instagram, even if your account is private, it's not. So just keep that in mind. Now, moving on to Apple. Start of the week at 245, currently trading down about 2.4% to finish the week at 240. Is Apple one of the stocks that we're buying? We'll talk about that here in a moment. Now, company is planning to spend about $500 billion, which to Apple is like to you and I, like $50 basically. But look, $500 billion, they're going to spend that in the US over the next 4 years. They plan to hire about 20,000 people. This is across multiple different states. It's also across multiple different product lines for Apple. It covers Apple Intelligence, even like data centers, also corporate facilities, but also Apple TV Plus production. So this is like TV movie type production, those types of things. My guess is this was kind of people are going to the White House and, they understand how Trump operates at this point because, they were around during his previous 4 years. You just go to the White House and you throw out these numbers. Apple was probably going to spend this amount of money anyways. Like, this is something that they would have done anyways. They may not have came out with a press release, but with Trump in office, you come out with this and, it gets attention and those types of things. Here's something really cool. So Apple confirmed they have mass production of its chips in Taiwan Semi's Arizona plant, and that is already started. And I think it's like either right on schedule or it's actually slightly ahead of schedule. So props to the former president, Joe Biden. Props to the Congress and the Senate that passed the CHIPS Act. I think this is major cool that you have Taiwan Semiconductor actually making these chips here in Arizona. Now, the rub here is these chips will get made here in Arizona and then they'll get shipped to like China to be packaged up in phones. So we got a long ways to go from a manufacturing standpoint. But this is one key piece of the whole puzzle. And again, props to the previous administration for getting that done. It was really due to those subsidies. And those are the types of things I think we should be doing here in America. So props to them for doing that. Now, Apple inked a deal with Indonesia. I got to get to know the Indonesians, man. These guys are pulling off some great stuff here as they've got the iPhone 16 ban lifted. So if you weren't familiar with this story, we covered it multiple times. So Indonesia was like, we're banning the iPhone because it's not made, a certain percentage of it is not made in Indonesia. So you got to make this thing in Indonesia in order to sell the phone here. So Apple's like, well, of course, we're not going to, make the phone in Indonesia. It probably is not economically viable, but we certainly want access to that market. So initially, Apple came to the table with $10 million. Then it went to $100 million. And then I think it went to $1 billion. So the two have, reached an agreement. My guess is it's probably north of that $1 billion mark. And props to the Indonesians. They're probably, the government there is probably, got a little grease on their palms, so to speak. Moving on to Amazon. Was Amazon one of the stocks we bought this week? If you watched our short farm videos, probably already know the answer to that. Start of the week at 216, dip low. Pat yourself on the back if you got it down here at 205. Not saying that's the bottom, but that was the bottom this week, as we rebounded a little bit with Amazon to finish the week close to 209. The company showed off AI-powered Alexa Plus. This was at an event earlier this week. Now, Alexa Plus is going to cost you $19.99 per month, but it will be free if you're a Prime member. So that'll be interesting. I'm not an Alexa user. I don't have any Alexa devices, but this is kind of cool. I mean, this is like shows you the value prop that they do. So it's $19.99 per month, but oh wait, I'm a Prime member already, so now I'm getting this $20 benefit that I didn't even know about, so it makes me want to use it. So that's pretty cool. Now, Andy Jassy showed this off on social media. I watched this. I didn't watch the whole presentation, but I did watch their kind of thing that they had here. It is interesting. It's a conversational AI. I think these things will become more and more popular as we move through maybe another year or two. This is also the next step in getting AI, quote unquote, everywhere. Like your grandma and your mom, or maybe even your wife, they're not going to log into ChatGPT or Google Gemini. Heck no, they're not going to log into Grok. But they might get an Alexa assistant here, and this is where AI starts to expand out into everywhere. It also means an expansion of compute that's probably going to be needed later as well. We'll talk about that when we get to Microsoft. Now, Amazon's going to show off more new gadgets later this year, although Andy Jassy was a little bit light on the details. He also talked about those semiconductor controls that were put in place by the Biden administration, and the Trump administration is currently looking to potentially expand them, although Jensen Huang, Andy Jassy, pretty much every tech executive is trying to get Trump not to do that. Right now, he is on the sidelines of those things. That's something that we're monitoring very closely. I have no indication which way that will go. Now, Amazon is going to unveil, or did unveil, a new quantum computing chip. This also joins Microsoft, Google, and the quantum stocks, which have seen a wide array of interest from particularly retail speculators over the past couple of months or so. My understanding is these quantum chips being released, particularly by Amazon and Microsoft, these are behind what is out there from a quantum computing perspective. Google's was the most impressive, but again, these are more theory rather than being put in practice today. They are unveiling these things, but they're not really being used for anything super useful now. Obviously, though, in the future, that could change. Jensen Huang says it's probably maybe a decade or more away. Now, Anthropic, which is backed by Amazon, I believe Google also has an investment in here as well. They released a new hybrid Claude 3 Sonnet model, which allows you basically to prompt these things with different types of queries, and then it decides if it wants to do deep research. So that's kind of the trend in a lot of these AI models. Like if you wanted to do deep research where it surfs the web and collects all this data and basically writes your report, you kind of have to click over into a different functionality. And, you know, if you want it to be more conversational, it might be something else. You kind of have to prompt the AI model to, depending on how you want to use it. The Claude 3 is, or Claude 3.7 is saying it's a little bit more of a hybrid. It will kind of understand the context of your question and do the research that is needed. Now, the company is looking to raise $3.5 billion to reach a $61.5 billion valuation. Will one of these companies go public in 2025? We'll see what happens. Moving on to Netflix. Started the week at about $1,000, down about 3% to finish the week at $980. Not a lot of news out of the streaming giant. A lot of news out of Nvidia. Started the week at $138. I'm seeing we're up 3% on Friday, but we were down about 9%, nearly 10% on Nvidia this week after the company announced earnings. Now, we've obviously got a full video here on the channel. I'll talk about it also this weekend on the Semiconductor Recap Show over on the Equity Empire channel. But look, yeah, it's 78% growth year over year. Revenue was actually fantastic. Okay, it beat expectations. The upcoming guidance more or less beat expectations. But, you know, this is like Patrick Mahomes going to the Super Bowl and, having a good game, but losing. You know, this is where Nvidia is at. Okay, it's not the kind of AI stock that is taking everybody by surprise at this point. But can you keep accumulating it? When we get to the technical segment, we'll take a look there. Now, talked about how there could be future U.S. Chinese chip sanctions. You also have the tariffs which are being tossed around, and so you could also have Chinese chip sanctions as well. My if I were to just guess, I don't really have a lot of insight here, but I would guess Trump will probably put these on. I don't think he cares. I think he's getting a lot of pressure from Nvidia and other semiconductor makers. I just don't think he cares at this point. It's a slightly different Trump. Number one, the mainstream news media doesn't have as much power or as much influence as they did maybe, I guess it was about 8 years ago. I mean, basically nobody's watching CNN and MSNBC and Fox News these days. Like nobody cares about those networks unless you're like, super baby boomer. Another thing is like he's not trying to get reelected here. And so like, I don't think he cares. And so I think he will probably ratchet these things up higher. It will impact the revenue of all the semiconductor companies. If he takes them off, then you'll have a 10% rally of at least the mega caps. The smaller caps would probably rise 20% in a week if he takes them away. But I just don't think that's going to happen. Now, Nvidia-backed CoreWeave is said to go public for a $4 billion IPO very shortly. CoreWeave's probably seeing a little bit of writing on the wall that there's all this data center CapEx spending, so they better go public in 2025. And the headline is a little misleading. It says $4 billion IPO, but that's actually what they're trying to raise. They're trying to raise that at a $35 billion valuation. One of the smaller data center providers that we've recommended called Nebuous, I think has maybe a $8 to $10 billion valuation. So it just shows you how these things can grow. And CoreWeave doesn't have an autonomous vehicle or other business units that Nebuous has. So I tell you what, if this company goes public, it'll draw a lot of attention to the others in the space. Now, Figure CEO, Figure is an AI company. They're planning to launch their own home robots with alpha testing later this year and potentially in the home on a kind of a wider basis within 2 years. These Figure robots are very, very impressive. They also showed off this week the fact that in just 30 days, they have a second use case where these robots are kind of picking things off a package logisting line. These things are very, very impressive. This company is moving very, very quickly. And I would say along with Tesla, they're both doing very exciting things with these humanoid robots. This will become a story, bigger story later this year. My guess is Elon Musk and Tesla will hold a robotics event later this year, probably the third quarter or so. When you have that event, it'll cross over into mainstream news. And this is when everybody will become aware that that is the next trend that is coming. Obviously, that relates to Nvidia because the more of these robots that get out there, the more compute that you're going to need. Now, moving on to Google, start of the week at 181. This one down 6% to finish the week close to 170. Was Google one of the Mag 7 stocks we buy? We'll answer that question here in a moment. Now, Google fall into oversold territory. I tell you what, over the history of Alphabet, if you bought Google in oversold territory, you probably don't regret things very much. It's the first time in 5 months the stock's actually been oversold. So that might give you a preview whether or not it's a buying opportunity. Company plans to cut jobs in HR cloud units as the cost reduction moves. I remember we did Google earnings, and boy, you got to feel really, really bad when the company fires you, because you look at the financials of this company and they are absolutely fantastic. So the fact that they're continuing to do cost cuts, continuing to drive efficiencies over at Google, like from a human perspective, I feel bad for those people that lose their jobs, have their dream job probably, and then lose it. So I feel bad for them a little bit, but from a shareholder perspective, I mean, I absolutely love this when it comes to Google. Now, the company crossed the $1 billion mark for podcast users. There's a bunch of you on YouTube watching podcasts on YouTube, and it's a popular place because they do revenue share over here. So if you're going to do a podcast, you might as well post it on YouTube and make a couple of bucks, considering you post it other places, you probably don't make anything. Now, Salesforce inked a multi-billion-dollar cloud deal with Google as Salesforce launched this new thing called, I think it was called Agent Force. I just did a video for Equity Empire on Salesforce, went through the conference call, went through the whole thing. Really interesting what's going on at Salesforce. I'll save my full commentary for those of you that are going to come on the journey with us to the paid member side. You know, stocks like Salesforce and those types of things we'll cover over there. We'll continue to cover Google and give buy alerts for the Mag 7 stocks, but pretty much everything else will kind of go to the paid side because it's just not economically viable to post that information here. It just doesn't make a lot of sense financially. But Salesforce is interesting, and they partner with Google Cloud because if you listen to the conference call, there is no way in hell that Mark Benioff is ever going to partner with Microsoft with their cloud. So he's going to rely on Google and Amazon for that. Speaking of Microsoft, start of the week at 401, drifted lower and then rebounded. they were, I mean, right before the show, I will admit that I bought some shares of Microsoft. The company is planning to shut down Skype, which make old men like me a little nostalgic, as Skype was one of the first, or maybe even the first, video conferencing tool. They're seeking to move users over to Teams, which I see people regularly complain about. Now, OpenAI released what it's called a snappy GPT 4.5 model, although according to a lot of people that I saw online was that it's a big model. It's very expensive from an API call. So if you're one of these companies that tap into OpenAI, if you want to tap in and run your queries, basically pay OpenAI for access to the 4.5, it was actually really expensive. So that was kind of weird. And Sam Altman went on to say that it's a big, expensive model, but that it's not a reasoning model, so it won't actually move the needle from a benchmark perspective. So this model doesn't make a lot of sense to me, but what was interesting was that he said that they're out of compute. They're out of GPUs. Now that they would add tens of thousands of GPUs next week and maybe hundreds of thousands coming soon, but he was pretty sure people would use everything that they rack up from a GPU perspective. So this should be like an alarm bell, like an Amber Alert. Like you get those things on your phone, right? Like Amber Alert, Amber Alert. That's basically what this is. OpenAI's out of compute. Anthropic continues to raise money to do what? Buy more compute. Grok is basically doubling the amount of compute that they have. Other companies like Google have gotten on a conference call more recently and said, we're out of compute. Meta has also said, we're going to build $65 billion of data centers and we're going to go borrow a bunch of money because we need more compute. And then you've got companies like Figure AI. They're launching these robots. And what is that going to bring? More and more compute online. There's just an endless amount of data being created. Just think about the amount of data being created every single day, whether it's a video like this, it's stuff that you're doing on your social feeds, it's stuff that you're doing from a business perspective, all that type of thing. Think about that. It's not slowing down. In fact, it just gets exponentially more every day that passes. And so that means more computer chips. And so you can draw your conclusions which semiconductor companies will benefit from that. Now, Microsoft is asking the Trump administration to simplify those AI chip export controls. I don't know how much Trump is actually listening. I think he's pleased that these people are coming to the White House and kissing his ring, so to speak. But will he simplify the AI chip exports? Will he do anything here other than ratchet up the tensions? Again, I think we're seeing a slightly different Trump. And this is, look, we would have seen if Biden got reelected, or if he was able to get reelected, I think we would have saw a different Biden in his last 4 years. If Harris was here, I think that's a whole different discussion because, she's would have been in her first term. But this is the continuation of the Trump term. And I just see a man that really is doing what he wants to do. And he's going to do that, particularly the first 2 years while he has control of basically the government. Now, Microsoft clarified a TD Cowen report that says the company was pulling back on some infrastructure spending, but when you dove into the note, it basically said they were reallocating resources over in Europe, more to the United States. And if you really dug into the minutia of this, it was really just Microsoft does this all the time. They schedule out a lot of capacity. Sometimes that needs to be dialed back, but for the most part, it looks like Microsoft has plenty of demand. And if you believe Sam Altman that he's out of compute, then Microsoft is probably a beneficiary from that. Moving on to Tesla. Start of the week at 341, and my goodness, wow, this one's down 14%. I remember maybe about a month or so ago, Tesla had kind of their initial drop. Might have been a little bit longer than though. I remember I posted like a short form video on this one where the stock was crashing and I was like, just wait technically. And I think at the time shares were still like at $400 or maybe like $300. And I think I called out like a $260, $270 price tag and people thought I was crazy. And usually when the comments of my videos call me crazy, it usually means I'll be proven right later on. Now, Tesla saw that was like the most conceited thing I could say on a Friday, but here we are. Now, Tesla sees a sharp drop in sales in Europe. They sold just 10,000 vehicles last year. They sold 18,000. So there is some concerns that there could be a rising push to boycott Tesla. I don't know how much of this is, people, it's just popular or it's cool to say. In some cases, boycott Tesla. Very similar to like I could say, guys, I'm going to boycott, $50 million beach houses in Miami. I'm also going to boycott Lamborghinis and Ferraris. None of that was going to show up to me anyways. So I don't know how many people, these people that are boycotting Tesla, were actually going to be customers of it. Some nuance to this was the company's most popular vehicle, the Model Y, was about to go through a refresh. And so there could be that some savvy buyers were like, well, instead of buying a Model Y today, I'll wait until the new one comes out. Very similar to like if you're about to buy a new iPhone and Apple was a month away from coming out with a new iPhone, you'd probably, roll with your broken screen and your half working phone for another month until the new one came out. And so we'll see what happens, but there is risk. There is risk with Elon Musk being super political and, super polarizing. I see it on my comments all the time. I mean, half of you have like what I call EDS now. There used to be TDS, Trump derangement syndrome. I now think it's Elon derangement syndrome. And that is a 99% way to think. And I'm just going to be real with you guys. If you let somebody else control you and make you upset, that is a 99% way to think. I live out here in California and I have people all the time tell me, why don't you move to Austin? Why don't you move to Tennessee? Why don't you move to a red state? You've got to be sick of Gavin Newsom. And I tell them, I don't think about Gavin Newsom. Gavin Newsom does not make me angry. Over the past 4 years under President Joe Biden, he never once made me upset. I probably think about Gavin Newsom like 3 or 4 times a year, and I live here in California. The 1% learn that money solves everything. Money solves everything. The 1% in California, what doesn't apply to you? All the stupid Second Amendment rules in this state. Also, I can afford to send my kids to private school. I can afford to live in the safest neighborhoods. I don't see the homeless. I don't see the problems in the crime in California because I make the money to avoid it. I'm willing to do that. I'm willing to work hard. It was 75 degrees outside and I'm in short sleeves. Life is good here in California. I don't care if the government is Gavin Newsom or a different guy. It doesn't change how hard I'm going to work and my goals and my own dreams. And if you let Elon or Trump or Biden or Newsom control you, you're in the 99% mindset. Snap out of it. Get freaking focused on what matters. Your bank account, your livelihood. None of these guys control it. And the more time you spend worrying about these guys, the less money you're going to have. Now, deal shy Tesla did pick up some key assets of an insolvent Germany auto supplier. So it might tell you that they're seeing some demand there pick up. Now, Tesla is pushing ahead for plans with a ride-hailing service out here in California. There were rumors, at least reported by Washington Post, that initially it could actually be free. Now, the devil is a little bit in the details, and some people did pick up on it, that they plan to launch this ride-hailing service. It will likely have people in the car to begin with. But again, if you followed autonomous vehicle rollouts, they've all had somebody in the passenger seat at the initial rollout. Not in the passenger seat, but the driver's seat. So the initial Tesla robo-taxis, at least out here in California, Texas might be a little bit different, depending on the jurisdiction, might be a little different. But my guess is when they roll these things out in California, there will be somebody in the driver's seat supervising things. They'll allow that testing to go forward. They'll make any types of adjustments that need to be made. If the safety numbers are good, eventually the person is removed and then you turn into Waymo and you start doing 100,000, 200,000 rides per week. And so Tesla is going to grab market share by offering free to low cost rides because incrementally for the company, it probably doesn't matter that much. And they also plan to roll this out in China as well. We'll see if they're able to do that. Obviously, I have a Tesla. I drive full self-driving. There are certainly flaws with this. I think there's a lot of people in the Tesla community that hype full self-driving up bigger than it should be. But there's also a lot of people that don't own a Tesla, have never ridden full self-driving, that tamp it down more than it should be. It's somewhere in between there. And again, that's how the 1% think. The 99% is all in on a Republican, all in on a Democrat, all in on this sucks, all in on this is great. The 1% can see the nuance in these types of things and make decisions for themselves. My guess is later this year, there'll probably be some politics involved here. Tesla will probably get approval out here. They'll get approval faster in Texas, and this will impact ride-hailing giants like Uber and particularly Lyft, which has a smaller share of the market. Moving over to the very important technical segment of the show, we've got the S&P 500 pulling back from some highs that we made just a couple of weeks ago. Nothing to be concerned about here at all. You are pulling back to a 200-day moving average. It is still above an area where I'd be excited really about buying this from an index perspective. But you have a pullback in the S&P 500, and it's a pullback on a strong two-year uptrend. And it's a tiny, tiny blip in the radar. The more and more you stretch the chart out, always look at the chart, always look at it in the shorter term, but then stretch it out. And then you'll have a lot of context after that. Moving over to Meta, this one also pulling back from the highs that we made back like literally 2 weeks ago. So these things were at a high 2 weeks ago. Now everybody's panicking. You know, it's a bunch of people with like $800 in a Robinhood account that are panicking on these types of things. When you have stocks like this pull back, you should be excited. Again, 99% stocks pull back. They panic. They start freaking out. The 1% starts saying, well, boy, this is like a Louis Vuitton sweater on sale. I'm very excited about this. So I'm very excited about Meta. I don't own any shares of Meta right now. This one gets underneath I would say probably the 615 level. That's probably a good buying opportunity. Apple made some highs again a week or so ago. That's kind of the more latest highs. You made kind of all-time highs back in December. You're approaching a 200-day moving average. You're above a buying range for me with Apple, but that one actually still looks very good. Here was a very, very solid buying opportunity with Amazon this week. In fact, I sent out a short video on this candle wicked all the way down to 205. And I was like, oh crap. First of all, let me buy some shares. Did a video, published that. We wicked all the way back up to 211. So intraday, you could have made some money. This one then went all the way up to 220. Hovered in this area. Amazon's still in a buying range. This is still in a buying range. You're still in this 2-year uptrend. If this level breaks, I pointed this out also on the short video as well. You can snap on a fixed range volume profile. It depends on how far you want to go back with the price action, but there should be some support here at 180. I know this level down here, like 130. Look, I mean, these stocks could get back down to those levels. If they get down to those levels, then you just continue to buy those levels. But in the shorter term, in the 180s, you should have some pretty strong support as it relates to Amazon. But I step in early with these stocks because everybody sees the exact same thing. What I'm pointing out to you is not unique. Anybody that can look at a chart can tell you these types of things. Netflix is still above what I would call a buying zone, but it's actually approaching it for the first time since really January. So you've kind of pulled into this area. And I think that January number was like right before earnings. So it was actually difficult to buy that. What's cool about these stocks pulling back is we're post earnings. It's really tough when these stocks pull back into earnings. And it's like, gosh, should I just wait a week and wait 2 weeks when they report earnings? No, we're 2 months away from earnings on these. So as they pull back, you're buying this stuff. Nvidia also in an area where you can buy this one. The trend's a little harder to see on this one because you have these like breakneck trends. Again, the business has been transformed over at Nvidia. So that's what's different about this chart is you have a transformation of the company's business. So it's difficult to figure out where the support is. But right now with Nvidia, the support is right here at like 117, 118, 120. If you break that, then you're coming down here like south of 90. So if you think this level holds, Nvidia also very much a buying opportunity. Google's not the clear smoking hot buying opportunity. If you want to stretch Google out, I'll switch this to a weekly view. I'm going to show you this purple line has been intact since 2009. This is the longer term trend. Anytime I have a purple line on a chart, in fact, I'm going to hide the 200-day moving average just so it's a little clearer with Google. 200-day helps, at least in the shorter term, but what I like to look at are these purple trends. You are very much locked in an uptrend with Google. We're pulling back into an area where you can buy this one. Just understand you are still over and extended over the longer term trend. You'd have to come back into like the 130s, 140s. Now, fundamentally, valuation wise, you have to ask yourself that with Google, is it possible for the stock to trade into the 130s? Certainly, if the bottom markets continue to sell off, it will. But boy, you'd have a pretty cheap valuation on a stock that still has plenty of moat around their business. Another stock that dropped into a buying zone was actually Microsoft. This one pulled back to the long-term trend. This purple line has really been intact for about 10 years now. In fact, you actually could stretch this out a little bit longer than that. It just looks a little cleaner just doing that. And after 10 years, it kind of holds itself. But here's your buying zone. I've had these green boxes on Microsoft for a while. I love this. This just looks absolutely beautiful. In fact, right before the show, I bought shares of Microsoft. Also, Tesla pulled into a buying zone, wicked through it, and found some support. If you believe this trend of higher highs, higher lows has reached here at 280, Tesla's actually in a buying opportunity. This one tends to swing in and out of trends. So I wouldn't look at, especially shorter term trends like this, I wouldn't look at them maybe the same way I do at Meta or really all of these stocks. Tesla tends to swing. It's a little more emotional. Again, there's some of you that have Elon derangement syndrome. Some of you have like the opposite of that. Everything that Elon does is amazing. And so this one swings really, really widely, but this one also set up in a buying zone as well. There's 24-hour markets these days, so if you want to step in over the weekend, pretty sure you can actually buy these stocks. Tesla's in a buying zone. Microsoft's in a buying zone. Google's in a light buying zone. I would put Nvidia in that category as well. Amazon's in a very firm buying zone as well. Folks, that was FAANG Stock Recap Show for Friday, February 28th. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Be sure to join us next week. Equity Empire I think we're going to launch, and I'd love to see you guys over there. We're actually trying to reduce the audience that we're addressing. I know that sounds kind of weird that you're on YouTube, you're trying to get as many subs and likes and views as possible, but through talking with some mentors and talking and just kind of seeing the business from the inside, we actually want to address a lower number of people. And if we can start serving actually fewer of you, we can actually give you even more and more value than we currently do today. Like I said, it's just not profitable to post content about small cap stocks, mid cap stocks, even second tier financial companies, second tier software companies, second tier technology stocks. But some of these stocks I really like covering. Even when you stretch out into the McDonald's, the Walmarts, the Targets, you just, if you post videos of that on YouTube, you'll make $18. It's just not from a value perspective, and it's just not worth it. But I love following those companies. I love talking about them. I love researching them. And so if there's maybe a few hundred of you that are willing to come along and benefit from that research, well, I'm going to be your personal research analyst for over 40 stocks. And if you were to hire me individually, given that I live out here in California, I have a relatively expensive lifestyle, it would cost you hundreds of thousands of dollars. The Equity Empire subscription is actually going to be a fraction of that. And so it's going to be a lot of value. And I promise you the offer that we have initially is going to be one of the best offers that it will be the best offer that we ever offer to anybody that signs up. And so if you're one of the first people that sign up, I really appreciate it. If you can't afford it, or it's not for you, or you're not ready yet, there's still going to be plenty of content, and we're always going to be here providing free content for everybody. So I don't want anybody to think this is a goodbye. It's really a hello and an acceleration of what we've already been doing. Thanks for all your support. We're in our, we're fourth, fifth, sixth year doing this, and it's a lot of fun, and it gets more fun every single day. Thanks for tuning in today. Have a great weekend. Be safe, and good luck with your investments.